All right, let's also connect then with Hemang Jani, who's joining in on the show. Hemang, let's get in a sense as to how you're looking at the entire IT space. We were discussing that quite extensively. Owing to what the expectation is that we could see some sort of an uptake. For instance, we had Birla Soft, which was on the brokerage radar today as a strong opportunity to buy on declines. What's your outlook on IT as a basket?
Morning. I think part of the weakness that we had seen here in India also had to do with the way the Nasdaq and some of the top IT companies reacted in the past few days. Numbers were by and large okay. Some of the mid-cap companies delivered much better numbers than what the street was expecting. But my belief is that some of the domestic oriented IT companies are better placed, be it platform companies like Zomato, or you have something like Naukri, which has its own, India focused, job portal where you're seeing incremental positive data points. Also, some of the mid-cap IT companies where the numbers have been good, something like KPIT. So I think we should FSL also. So I think some of these companies are in a better position, and because of the volatility that we have seen in the past few days, some of these stocks are down about 5 to 10%. So they may provide a good entry point.
Interesting. That's, of course, the take coming in and some of the interesting plays out there. But, just taking a leaf, Hemang, from what my colleague Sharad as well was highlighting, the impact of some of the Bangladesh unrest and some of the Indian companies. And largely, it's the textile plays which would get impacted. It's very soon to try and assess the damage. But do you think, a fall in a trend, in a Wellspun, etc., should be looked at and bought into perhaps, if that be the case?
There are two ways to look at this whole, scenario. One is that because of the disruption there in Bangladesh, the companies which have a meaningful exposure already, because of the way the entire thing is, panning out, there might be negative reaction. But I think, it will all depend upon how long the unrest continues there. So I think if there is a meaningful correction in names like VIP or Marico, where there is a strong linkage in terms of their overall business, I think we should surely look at, some of these companies in terms of buying into it if there's a negative reaction. Secondly, when you look at companies like Trend or something like a textile theme, where because of the disruption, if you have any meaningful benefit to some of the Indian textile companies, I think Vardhaman, KPR Mills, Wellspun, these are some of the companies that may stand to benefit early days, because we don't know how long this will continue and whether there's going to be a real benefit. But at least from a technical opportunity point of view, some of these companies could, do well, at least in the short run.
Interesting. Hemang, since you did mention Marico, I'm curious to understand, given that even yesterday in the carnage, FMCG was the only hiding space, other than Marico, any other FMCG names that you're liking? And more importantly, are these long-term bets now after the Q1 commentary that we've seen from the FMCG majors, talking about a sustained rural recovery, or is it just a tactical play, you think?
I think very interesting question, Aisha. I think as a sector, it has started doing well, maybe as a part of the rotation, and more so in the current global backdrop where you're seeing increased volatility. People tend to move into the defensive themes. So from that, surely it makes sense. Also, the fact that you have better monsoon, and given the positioning of the government where they're trying to, showcase that they will be more focused on to the rural side and try to have some sort of a political advantage, that also fits into this theme. So I think companies like maybe Marico, Dabur reported good set of numbers. Britannia, the volume growth surely surprised. HUL also has some more room on the upside. So I think not necessarily from a 12-month perspective, but at least the near term, let's say next 2 or 3 months perspective, I think some of these companies could do well.
Meantime, we've also got some brokerage notes. For example, Nomura has come out with their outlook on Motherson Sumi Wiring, saying that it's one of the key beneficiaries of premiumization and the EV launches, and that going forward is going to be operating leverage that will drive better absorption of the startup costs. Hemang, just wanted to get in your take on Motherson Wiring, of course, and then other auto ancillary companies in this environment.
So Motherson Wiring, I think the numbers were slightly below estimates, mainly because of the startup cost of two plants. And otherwise, I think, overall, the company has done pretty well. And we expect, some sort of a revival in the EBITDA margin for Motherson Wire. And surely, we have a target price of about 80 rupees. So, around 65 odd levels should be a good entry point. About the global auto ancillary companies, they have gone through a sharp correction yesterday, primarily because of the numbers which were, out in US in terms of, the truck sales. So I think for the timing, given the run up that we've had in names like Motherson and Bharat Forge, you might see a bit of a underperformance, but at some point, maybe another 10-15% kind of a cut, Motherson would provide a good entry point.
Stay with us, got to manage
gold, Bitcoin, Forex, currencies, commodities, everything came down. And typically when these things come down, it's largely because of an event or largely because of technical factors. Thank God there is no event. Thank God it's not because of COVID or 2008 or 9/11. So that is a relief on that front. But the technical factor is something which may just prolong itself for next couple of days. And that is where you need to be a bit careful of. Hemang, have I done a decent job of explaining it?
Nikunj, as always, you make it very simple, very interesting. And I think, unlike, COVID or, some sort of unknown kind of, event, which really had a major effect in terms of the IVs and the volatility, and more importantly, the uncertainty around it. This time around, this is not, something like the market was not expecting at all. We do, get these kind of, events, and that leads to a bit of a, volatility. And because of the higher leverage in the system, sometimes the impact is much higher. But fortunately, in our own markets, the leverage is very much under control. If you look at the F&O positions, I don't think the leverage is, that high, at least on a positional basis. So, and also a lot of money is on the sidelines because the market did not have any meaningful correction. So I think we should, see stability returning back very soon for our markets. And important to note that our markets have done very well in the past, let's say a few days, while there was volatility in the global markets. Our currency has held out extremely well. So those are the, good signs for our markets.
Okay, so that's the yen carry trade. Now I just want to bring out one more aspect, that yesterday how acute the selling was in some of the global businesses, which is, look at Motherson Sumi, look at Tata Motors, and anything and everything which has got to do with Europe or US, it just came down. And Kunal, Motherson Sumi, Tata Motors are two large cap stocks which have a global exposure, but when things fell for them, they were down 8-9%.
Well, yes, Nikunj, and I think these were amongst the top three losers of the trade yesterday. And it's bound to have impact in terms of the sector as well. So yesterday we saw the entire auto anc sector also getting to a reversal of sorts. Now what matters over here is that how soon can these stocks stabilize, because the first port of call is that for traders who are looking out for maybe an exit or trimming of positions, they would need these stocks to be a lot more stable, because then selling these stocks at every dip creates additional pressure onto the stock prices over the short to medium term. And I think that's what happened to stocks like Motherson Sumi as well as Tata Motors yesterday. So I think on the way up, when the stocks get into a bounce, there would be an initial bout of pressure. But once the stock stabilizes, I think that's where better levels as well as better trading sense could emerge into these stock prices. So as of now, I would believe that wait out for that bounce to play out and then take a call into these names.
Hemang, what's your outlook on the quarterly numbers from an ONGC?
ONGC numbers were okay. The realizations were not that good. The volume growth was, about 3.5% or so. And I think in the current scenario, where the crude prices are going down, there is a slightly larger interest towards the oil marketing companies. We had seen a bit of a rebound there. But given the fact that, you will see a bit of a softness in the crude oil price, and operationally, some of the numbers that OMCs delivered were good. So I think I would be more inclined towards OMCs. ONGC, we do like the valuations and the overall theme there. But if you have a, let's say, about 5-7% kind of a correction, that would be a good entry point.
Kunal, what changes? When a shakeout happens, what happens is that imagine a tree, when you shake it out, some fruits will fall, some fruits will not fall. So shakeout like this changes the market leadership. So are we saying that for a lot of PSU stocks, we've got multi-year tops or multi-month tops now?
I think not just PSUs, depends because it's for many sectors. For example, autos was one of the strongest sector. Now it could be possible that if these stocks they don't make a very strong bounce back, I think the best could be behind to these auto stocks. And I think we've been making this point time and again. With every minor correction, every sudden correction for the index, the sector patterns change, and those patterns depends on the duration of what the trend lasts. For example, we saw the same trend change in terms of sectors happening post elections. Just prior to the elections data, you had PSU stocks which are going absolutely on full song, but post elections we saw the trend change completely for the sectors. The PSU stocks, the PSU banking names, these were the stocks which actually became key underperformers, and what emerged from there were the prior underperforming sectors, IT, FMCG stocks, and they managed to shine quite well over the last 1.5 to 2 months. So it all depends on how strong the undercurrent is or the current trend is for the indices, and that's what probably tries to help us guide towards the sector patterns. But yeah, I strongly believe that with yesterday's and the last 3-4 days of correction, there should be a strong sector change which will be visible over the next couple of days.
Okay, there you have it. Hemang, on that note, thanks so much for joining in and sharing with us your outlook on the markets. What are the pre-open rates indicating this Tuesday morning? The landscape, as we said, is ever so different from yesterday. And there's actually a flicker of green on the Nifty, but we'll have to just wait and watch how the rest of the day pans out. But for now, 24,000 thereabouts. And for the Sensex, down about 570 points. Let's understand the mid-cap trading strategies as well. And Rudra, take us through your top idea.
See, for me, even like yesterday's market too, NCL industry was holding very strong. And for me, cement and related stuff can do well fundamentally too, because it is more a domestic story for me. So NCL industry looks a good buy for me. Looking at targets of 260 initially and eventually 300, one has to have a stop loss of 220 on a closing basis for this long call.
Okay, and Kunal, your top idea?
I'll go with the buy on Philip Carbon. That's a chart which has apparently done pretty well. Even over the last 2-3 days of the heightened volatility, the stock has been making new swing highs for itself. So would look out for targets in the range of 400. Stop loss could be kept at 370.
Okay, there you have it. That's the view coming in on the top mid-cap strategies.